All right. Another wild day comes to an end. Hope you guys made some money out there. Had a pretty darn good day in the trading this morning. But it's back to work tonight. Got more big news coming tomorrow. And boy, did we get some big moves, just as we expected. Big moves for that CPI report today. We have a lot to cover here tonight. Got a lot of great trades. We're tracking for Thursday. Got some more inflation numbers coming tomorrow. And as always, I'm going to cover all my favorite trades in the video here tonight. Then we get a game plan to make some money on Thursday. Before we jump in and get the game going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you guys enjoy the video tonight, do me a favor. As always, I appreciate you guys tuning in. Hit that like button. Give me a shout out in the comments section if you guys enjoy the video tonight. Thank you so much for tuning in, supporting the channel here tonight. But enough of the intro, right? Let's get ready for Thursday. More inflation numbers coming tomorrow. And I'll tell you, the name of the game tomorrow is likely going to be stop runs. Running stops, stops as fuel, trapping traders. And the reason why I say that is because we get a lot of ranges on the charts right now, right? A lot of ranges. You get a range on the S&P, range on the Nasdaq, range breakout. On the crude oil, we've got some really big ranges on all these charts. And if you know me, right, you know me, whenever we see ranges, we're looking to fade breakouts, trap traders, use stops as fuel. So tonight will be a masterclass on how one of my favorite trades is stop runs, failures, and we're going to go over all my favorite trades setting up on both the long side and the short side tonight on the S&P and the Nasdaq. Oil's pretty straightforward, right? A nice strong bull run here. I'm looking for breakout pullbacks, right? Breakout pullbacks are the name of the game, and I'll show you how to use stops to make the easy money on the crude oil with that breakout pullback. A lot we're going to cover here on this video over on S&P, Nasdaq, and oil. Before we go into the charts, though, here tonight, don't forget, tomorrow morning, we've got the PPI number coming out. Think of the PPI like the little cousin of the CPI number. It's probably not going to be as wild as a CPI report. The CPI report are the consumer prices. The PPI, of course, is the producer prices. The consumers, of course, drive the economy. So it's more sensitive, right? More of an impactful news event. We will probably see some drama around that 8:30 number tomorrow morning. So we definitely do expect that to be something to keep on our radar. And of course, we'll have a front row seat for that tomorrow morning in our trade room. In tomorrow night's video newsletter, we'll come back and we'll talk about a very important Friday morning. And it's not just because of retail sales. It's also because we got some bank earnings coming out before the open on Friday. So again, big news tomorrow, right? Little cousin of the CPI report. We get inflation tomorrow morning. And again, tomorrow night, we'll talk about going into the beginning of earnings season. If you were around last month or last quarter, boy, did we have a field day with earnings a few months ago. So very excited for earnings season coming in, kicking off on Friday. We'll get to that tomorrow night, though. Let's get back to our charts, though, because, of course, the money is made on the charts here. And I'm going to go through each one of these charts right now. I'm going to go over my favorite trades. And remember, every single trade I talk about tonight can be applied to your favorite market. So get comfortable, take some notes, grab some screenshots, and I'm going to tie it all together. That way you have a game plan to make some money on no matter which one of these markets is your favorite. Let's go S&P first. S&P, we'll go Nasdaq. We'll wrap things up on the crude oil. A couple things. First of all, guys, this is an 8,000 tick chart. It's a tick chart. All these charts are tick charts. This is the 21 EMA, that yellow line right there. That's the 21 EMA, the exponential moving average. And as always, I do include some higher time frames linked up in the description of the YouTube video. I've got my 60-minute charts, my 4-hour charts. I like to use my 60-minute charts for direction bias. I like to use my 4-hour charts for major turning points, all right? So if you want to see kind of the lens at which I'm looking at, the bigger picture, definitely check those links out, linked up in the description, and then I'll give you a good companion for the video here tonight. So with that said, now that you know what you're looking at here tonight, what's the most important factor on the S&P, really, and the Nasdaq? The S&P and Nasdaq are both very much range bound right now. The S&P does have a more bullish bias than NASDAQ. I'm going to use this bullish bias as a bit of a filter or a lens to look at this here tonight. But really the most important factor right now is ranges, right? We're basically sitting right around the lows here of some big range. I got a range above me, and you'll notice I've got this kind of expanding triangle, right, coming out. Ranges act like magnets. And so we're sitting at some pretty significant support, right, underneath that trading range. You could probably also see, too, there's a couple larger channels coming up off these highs, off these lows. So we're definitely bearish in the short term right now. There's no doubt about that. You don't need me to tell you we're bearish in the short term. But I'll tell you, it's difficult to justify selling down here. I would imagine sellers would love to get a breakout pullback, right? I would imagine that range in the middle, strong move down. I would imagine bears would love to short the top of this channel, right? Short kind of the breakout pullback off that trading range. And knowing this, right? Knowing that we are kind of overall bullish on the 60-minute, but we're sitting at support. We're still pretty bearish, though, in the short term. I think there's really the money to be made on both sides of the market. I would love to trap in some bears, right? Maybe use one of my failure patterns down here, like you guys are learning in our free trading course, right? Trap in some bears, right? Get this thing to short squeeze. This may end up turning into a full-blown reversal, and we'll talk about how to know the difference between a pullback and a reversal. But I also think, too, there'll be some money to make, right? Back down as we go. So I want to cover all these bases here tonight. That way you guys have a game plan no matter kind of what we get here on the S&P and the NASDAQ. Let's talk about how we can use stops down here. And I want to make it very clear, both on the S&P and the NASDAQ, you know, it's here, it's here, it's here. There's a lot of levels you can see here down below us. Really, in all reality, the best reversals, the best stop runs would probably be down around that 4,100 area, even just a little bit below it, right? 40.95. If you go to that 60-minute chart, you'll see why, right? Kind of a big bear trap area around that 40.95 area. So if I want to be a buyer down here, and again, buying because we're in a range and we're at support below the range. If I want to be a buyer down here, the problem is what? It's momentum, right? A lot of momentum here. So we have to respect those bears, and by doing that, we can then use their stops as fuel. Now, there's kind of two basic patterns that you want to look for to be buying off the low, and we'll talk about how to short this thing right off the high here in a moment, so don't you worry. Because we're so bearish, right, this is not a bullish short-term market, we need to trap in the bears, use their stops as fuel, and to do this, we want to let the sellers try a couple times, right? Let them try twice, to be more specific. Now, this is where we're going to kick it up a little bit more, right? In my free trading course, you guys are learning about failures, right? And so this is kind of a classic failure pattern where we let the bears try a couple times and we try to use their stops as fuel, right? To kind of turn this thing over because, again, we're so bearish in the short term. The challenge we have to deal with all of this bearishness right now is we don't want to buy as it goes higher. So really the ideal way to run the stops is with what I call a crown reversal pattern, right? And a crown reversal is nothing more than a slight variation of a two-try failure like you guys learn in the free trading course, right? So bears try once, bears try twice. I really want to get underneath a prior swing, right? Underneath. That way I'm buying as low as I can because, again, we're so bearish, we have to assume that it might pop up and want to roll over again. And I want to make sure I'm getting it as low as I can. That way I'm already in the money, right, on that trade. I can move the stop up to point of entry, right, and basically lock out any risk on that reversal. Now, keep in mind, right, sometimes these things will kind of V-bottom-ish, right? They'll go like that, go up like this. Same basic idea, right? You want to kind of let these bears try a couple times and try to get just underneath a prior swing. Again, these would be crown reversals, and my objective would be back up to take out the low of that range, up around the high of that channel, right? We see a lot of those in the free trading course, so hopefully that will give you a good example of how to use it here tomorrow. And again, it could be here, it could be here, it could be even lower down around that 40.96 half level. Another setup I'm watching for right now is because this bearish momentum is so strong. We might easily have a little channel coming down like this, right? It may pop up and it may immediately retest that low. Okay, remember, a lot of momentum there for the bears right now, right? So if it does pull back and begin to retest that low now, honestly, that's even better for the long side because now all the sellers come in, they're going to short that pullback, right? Not my favorite trade, but hey, right? There's lots of ways that traders participate in these markets. If the bears come in and they don't try one strike, right? They come in, they kind of race this thing rocket right back down to that low now. Now all the bears who took their profit, right? Now all the bears that sold short, they're likely now going to take at least a good chunk of their profit off of that low. And this is where we can be a little bit more aggressive. I call these double bottom reversals. We still want to use the failure pattern and we still want to use stops as fuel. And again, we're still pretty darn bearish overall, right? So we've got to be using what I call the 2-try rule, right? And that'd be an easy way to kind of pick that bottom. And again, the objective here now, right, will be getting up, up into that high, right? So that's the name of the game, right? The name of the game is either going to be a crown reversal, right, which of course will happen first, right, as we go higher. Crown reversal, basically a trap setup, right? Or a double bottom, use that 2-try failure, just so you guys are learning in the free trading course. Which reminds me, I've talked a lot about the free classes so far. I know that most of you guys have taken the free course. You've learned things like crown reversals and why I love trap entries. You learn all about running stops, right? My favorite way to trade is to use stops as fuel. But if you're here for the first time today, if you haven't taken that free course yet, I'll put a link up here for you quickly in the upper right-hand corner. Grab that link, take that free trading class, because the strategy you'll learn in that video series will show you a simple trick to know exactly where the best winners are going to be each day. And I'll teach you 4 of my favorite entry patterns to help you start making money on your own. If you're tired of missing the best trades right now, if you're taking too many losses, definitely grab that link and take that free trading course, and you'll learn how to use stops as fuel, especially in range-bound markets. All right, so now we know kind of how the game plan looks, right, as we're going lower. Just be careful trying to sell down here. You know, I could easily see this continuing going lower here. Just be careful trying to sell down here. Again, we're at the low of a really big range here. Unless something really races lower, right, it's going to be difficult to want to justify shorting this. Okay, now going higher here. We talked about how to make money going higher, right? Now, how do we sell it? Because I definitely like the idea of shorting it, right, off the kind of underbelly of that trading range. I like that idea, but how do we know the difference between a pullback that I can short, right, and a reversal? Because let's face it, right, we're at the low big range, right? This could easily rotate up, down, and all the way back up on the S&P and certainly on the NASDAQ. Speaking of NASDAQ, let's grab a look at the NQ right now. The NASDAQ is in a very similar situation. It's a little bit cleaner as far as the range goes. I would say, though, and you'll see this linked up in the description on the 60-minute chart on the NASDAQ, the NASDAQ looks a lot more mixed bias right now. What I mean by this is you could definitely make a case for the bulls, but we have, you'll see, right, on the 60-minute chart, you'll see it's a little more difficult to call this a bullish market on the NASDAQ. It's slightly weighted now to the downside because of that kind of bear move down into the range you'll see on that 60-minute. Now, knowing that we are a little bit more bearish, or should we say a little bit less bullish on the NASDAQ, it's, again, you'll notice here, we are right at the low of a major, really kind of a weekly, multi-day trading range here. And this is a dead giveaway, right? We're very bearish right now. There's no doubt about that. But look at what happens when you go to the low of a trading range, right? Oftentimes we end up bouncing right back up into that trading range. So very difficult. Like I said, we're very bearish right now, but very difficult to justify selling down here. I think even more so here on the NASDAQ because that range is just just so well defined. So the same game plan we talked about on the S&P, right, where it will be that crown reversal, again, because momentum is so strong right now, right? You can be careful picking bottoms no matter where you are when momentum is this strong here. And again, it may end up kind of punching up a little bit, right? Punching up a little bit. Just try to get in as low as you can with those traps as we're going back up into that trading range. Again, if we do pop up, roll over, I like the double bottom, right? Remember, the double bottom, you can be a lot more aggressive, right, off of that low just because you've got, right, that retest of that low is already in your system. One thing I should also mention too, and I forgot to mention this on the S&P, if we end up going up, retesting this low here at some point tomorrow, right, and again, I'm gonna cover that short here in a moment, and we look for, right, that 1-2 for the bears down here, right? Trapping the bears. If we can get that short squeeze, right? That kind of reversal off of that low, where do the bears want to go? They're going to want to take out that high, right? And I forgot to mention this on the S&P, and I should have mentioned it earlier. This could also apply to the S&P. So if we get this really deep pullback, right, and this run back down again, keep your eyes on that medium-term high. And the reason why I say this is because a lot of times this thing will kind of punch up, and you can begin looking for a new channel. Now, watch how I draw this. This is a really important technique to learn. We'll do it more tomorrow in the trade room, is we draw the channel off the high here now. And we do that because it's kind of the only thing we have to work with, right? I'm not going to draw that trend line like that. It's very rare we get that trend line hit again. I want to draw that trend line off the highs, though. Okay, and you can probably now see the idea behind this. Now that trend line becomes a channel, and now we can get really one of my favorite trades. I call these the first test, right? First test trap, right? Now, this could be any of the entry patterns you guys are learning in the free video course, right? It could be a trap setup like this. It could be a failure pattern, right? Get underneath the moving average. Use stops as fuel, pullback combinations, all the setups you guys are learning in the free course. The one kind of rule about this follow-up trade is you're going to want to make sure you get it really ideally before we take out that high, right? So before we take out that high, or if we were to go kind of like this, right? Up, back, go like that, now that high is very low. And so if we were able to trap in those bears, 1, 2, you just want to make sure you have a pretty good break of that structure, right? You want to make sure you get a really, I would say convincing break, right? A very convincing break of that high, right? And then from there, mark off those highs, mark off those lows. And again, we're trying to kind of rotate, right? This range, of course, is a magnet. It'll want to rotate, right, going higher here, potentially back up to that prior week close, potentially, right, all the way back up to that previous high. But that's kind of the game plan, right? Could have some variations there off of that low. And again, this is the same basic idea here on the S&P as well. All right, sorry about that, getting off track there. I want to talk about now on the pullback. Okay, so if we get the pullback, and again, hopefully we'll get a chance to buy a bear trap, right, on the way higher here. How do we know, right? How do we know if a pullback can be sold, right, or if the pullback is a reversal? Well, let's go back and look what happened in the CPI report today. Okay, we talked a little bit last night about what I call a two-try trap. Remember two-try traps? There, anytime we see a strong move, a shallow pullback, right? Remember this? And a higher high in price, right? Strong move, shallow pullback, higher high in price. Well, that of course is to prevent us from being, basically a V-top, right? Off the high like that. If we pop up and we get to pull back, and the buyers try once, and the buyers try twice, and the buyers keep trying, right? Eventually, their stops are going to get hit, right? It will collapse back down again. Great example of using stops as fuel for the buyers getting stopped out. What I want you to think about now is if we do end up pushing higher here, we're going to want to make sure when we come back to that moving average, look what happened back here, right? Notice how they tried. If they pull back and they jump, right? If we can get off that moving average and separate, right, off the moving average, that's a dead-on reversal, right? Obviously, right? And at that point now, it's already turned. And another one would be what we call a pop and grind, right? So it pops up, it begins to grind, it begins to grind, right? That grind is a very, very good sign. I can mark off a channel off that high, right? Mark off that low and start looking for bear traps right off the low of that channel, all right? But if we end up popping up, we get up into this area of resistance, right? The underbelly of that trading range. Again, we're overall pretty bearish, right? On this, at least in the short term right now. If we start to get around that moving average, now this is where you got to play it safe because, again, we're kind of at the low of a major trading range here. If I start seeing these buyers trying once, trying twice, now the dream setup, right? The dream short is a crown reversal. And you can see an example of one right here, right? Where it kind of pops up, we pull back, the buyers try once, go lower, buyers try twice, and you can see everybody and their sister was waiting there to short that thing back down again. That's going to be a very, very desirable short there off the high of that range, or sorry, off the high of the channel and the low of that trading range. The objective, of course, now is to go back down and retest the low. This is a good example, again, of using stops as fuel, right? And the reason why you want to use stops as fuel is because, again, you're inside this big trading range, and we know the market likes to rotate back and forth, right? So there's probably just as much likelihood that we may pop up, we may pull back to that moving average, the buyers may come in and just rip right off that moving average. We call these 1, 2, 3 reversals. Again, be very careful buying that first pullback. A lot of times it fails, right? This is where knowing the short-term momentum is very, very important, right? I can't buy that first pullback. We're just too bearish in the short term. But if they hold that pullback and jump, now this follow-up trade, right, off that high, now what you do is go off that big low, right? Go out, look left, find some prior swings, grab a prior swing. That's where traps live. Underneath the 21 moving average, this is where failures live. Failure into pullback, right? And oftentimes on these types of what we call 1, 2, 3 moves, okay, you'll learn a lot more about 1, 2, 3 moves in our video classes. But oftentimes that first leg, right, of that kind of 1, 2, 3 leg, the first leg is equal to that third leg, or the third leg is equal to that first leg, right? And that'll give you a chance to really fine-tune that exit, all right? So it really has a lot to do with what it looks like if we get that pullback. And again, one other variation would be, it pops up, and rather than the buyers coming in and either failing twice and back down or holding off the moving average and jumping, sometimes what happens is it just floats, right? It floats. This creates a very strong move there for the buyers. We know we have this trading range, right? We're trying to rotate back and forth. And so ideally, before we start getting up around that, I would say that prior week close up there, I'd like to be able to getting that new channel off the high, down off that low. And again, what I always tell my students, look left, find some prior swings. Again, look for those traps, right? Those failures below the moving average, those pullback combinations. And again, first leg, third leg, right? That usually give you a pretty good exit. You know, clearly if the buyers get some big reversal, they're looking for a retest, right, of those big highs up there, right? So we know that'll be a good spot to leave a runner. All right, so I think by now we've got a pretty good game plan here. The only other kind of variation of this would be if we wound up going sideways in a range down here. If we end up going sideways, and again, this would be the same kind of principle here on the S&P. If we end up going sideways in a range overnight, we got PPI number coming tomorrow, all of a sudden now that range becomes a new magnet. Again, we're still in a big overall range, so keep an eye on a breakdown, a crown reversal, and a snap back up into the range, right? This could also apply, again, same idea here on the S&P, right? Let's say we go sideways here overnight on the E-mini. We get all that support down there, right? Let's say we go sideways overnight on the E-mini, right? That breakout going lower again, I know we're bearish, but trying to sell into these major lows at the bottom of the weekly range is just asking for trouble. I'd like to get some rookies trapped in. And again, we're very bearish, right? So we have to rely on stops to turn this thing around and squeeze this thing higher for us, right? So it's 1, it's 2, crown reversal, right? It's going to be it's pull back, right? It could easily break out, pull back, right, into a double bottom, double bottom, and again, 1, 2, not necessarily a crown reversal that time, right? But definitely, we definitely want to continue to look to run stops here because you're trying to turn this thing around, right? That'll be the key there on that move going higher. All right, guys, I'm sure there will be some other variations of this tomorrow with more big news, but that should give you some food for thought to work with tomorrow morning. And don't forget, right, we'll do this together tomorrow morning, 8 o'clock Eastern time in our morning trade room. Let's keep going here. Why don't we wrap tonight up here on the crude oil? I think we got a pretty good game plan here now on the NASDAQ and the S&P. What's the most important factors right now on the oil? Very strong move, right? Anytime we see a really strong move in one direction, what do we expect? A pullback and a retest of the high, right? Now, we have an overall bull bias. The 60-minute chart is very difficult to call it anything but a bull market right now for whatever reason. Doesn't really matter why, but we're definitely still bullish here on the oil. So knowing that, right, knowing that we have that big run up and looking for a pullback, where do you think a good area to pull back to would be? Yeah, the range. Right? We had that big OPEC production cut range, right? We spent the last week and a half trading around. I mean, I can't think of any better location for buyers to be camped out right now than right around that 82, 81, 81 area. I mean, we see a lot of breakout pullbacks in a bull market like this, right? So bullish into a range, big breakout higher. The best thing about this chart right now is we haven't got that pullback yet, right? They haven't pulled back to that area yet. You know, sometimes it'll go right away, and you're like, oh boy, if you don't get it the first time, you might not get it the second time, right? So this one definitely sets things up for it. I would also anticipate, because the oil is very much rangy these days, I would also anticipate a range up here. All right, so let's kind of talk about this. I like this channel, but this channel is a little bit too steep, right? A little bit too steep. You'll see tonight on the 60-minute chart, linked up in the description of the video. You're going to see, actually on the 4-hour chart to say, we are right at a major potential bull trap area on the 4-hour. It's just beautiful, kind of major top on the 4-hour. So, you know, we're very bullish right now. You got to think though buyers might be a little bit hesitant to be buying too aggressively up here, so I would love to get a nice deep pullback. The goal is, my favorite trade probably on oil for tomorrow would be a nice deep pullback. You can see I'm trying to use a bit of a larger channel here to try to get that channel line up right along that 81 area. Now, the nice thing about a deep pullback is that you can risk small to earn really large, right? Deep pullbacks are really, really great because of the risk-reward ratio. But remember, there's no free lunch in trading, right? Or really anything in life, right? You're going to pay a price for that. A deep pullback will usually be very, very sharp. It'll oftentimes be very, very bearish in the short term. So we've talked a lot about using stops as fuel, right? Stop runs, and this is exactly where you want to look for a stop run, right? Hopefully, this pullback is really scary, right? Hopefully, it's really sharp, really fast, you know, enough to make inexperienced traders and kind of gamblers say, oh, we're going back into that range. We're probably not. All right, it would require a very, very big turn of events, which could happen, but the odds are not on the side of a full reversal right now, not until they retest the high, right? Once they retest the high, bingo, then maybe a reversal back down again. That's basically what happened today on the S&P, right? So once we get that deep pullback, now hopefully we get some bears coming in. Now, one nice thing about this situation is we are already bullish overall, so I don't need that crown reversal, right? On the S&P and the NASDAQ, you really want to get that crown reversal, right? Because you have to assume, because the market's so bearish on the S&P and NASDAQ, you have to assume that if it goes higher, it could get clobbered right back down again, right? That's why you need a crown reversal when you're trying to go against that kind of short-term momentum there. This one's not nearly as bad. Now, would a crown reversal be fantastic? Absolutely, right? It is the creme de la creme, right, of running stops, because you're getting in so darn low, right? But if we don't get that, right, if all they do is go one try, two try here, right, it's very good chance here stops are going to get lit up, right, and this thing will pop and run higher. What I like to do in these situations is look for one of these two follow-up trades. The follow-up trade we like the most is that breakout pullback, right? We call these failure into pullback combinations. They oftentimes will pull back right around that same high before the market begins to make that jump higher, right? And you guys are learning about failure into pullback combinations in the free video course, right? So failure pattern, again, it's a 2-try failure. You want that deep pullback, right? That'd be ideal. And then into that pullback setup as we go. Maybe as long as we can do it before we retest that high, maybe even a strength entry, right, on the way higher, right? Failure, pullback, strength, right? We talk about this. It's called the price action cycle. So keep your eyes on that, right? If we get the deep pullback, that would be kind of the best scenario here to be a buyer. If they do V bottom, sometimes they'll kind of V bottom will come right back up. If it V bottoms like that, okay, now let's look for traps. Right? Now look for traps. Ideally, I want to go down, trap the bears in, and remember, you want to buy as low as you can, right? So you want to buy as low as you can off those areas of support. If for some reason we don't get that, right, and it kind of boing right off that bottom, again, this is the idea is buy as low as you can, right? And you want to do that with a bear trap in this example. So if it really is a sharp reversal off that low, don't chase it. Look for that bear trap. That'll get you in. That'll get you in with the least amount of pain, and it'll oftentimes snap right back up to retest the high. One other thing to keep in mind, which should not surprise us at all, because this is how oil's been lately. It's very much news driven, right, by the war in Ukraine recently. So if we do pop up and go sideways here, now that range becomes a very big magnet, and it basically confirms that new price, right? And it could be here, right? It could be here. It could be anywhere. If you're a member of my trade room, you know that whenever we see a directional range like this, we can get a lot more aggressive. And what you want to do is go looking for swings, right? Go find support levels. And what I'm going to do is wait for that pullback, let the bears come in and try to get short and sell and literally buy right into the stops, right? So the longer we go sideways up there, really the more aggressive I can be on a failure pattern or a pullback combination, right? I should mention that too, right? The only challenge on these is you want to get that pullback combo before you take out the high of that range, right? So remember, the key is when you're bullish and you go into a range here, find support, right? That's always the key. Find support levels underneath the trading range. It could be swings, it could be trend lines, and we'll talk more about these techniques in that free video course, right? Range expansions, pendulum swings. You guys learn about those in the video course. So failure pattern, pullback pattern. Again, just remember the pullback pattern needs to happen right before we go back up and take out that high. All right. On these types of moves, I like to leave that runner, right? Because these oftentimes will slingshot, right? As the market kind of rotates off the low, the bears get trapped. These can oftentimes really, really punch and run higher, oftentimes equal to the amount below, equal to the amount above. We call those pendulum swings. So think about leaving a runner target up there, right, for a pendulum. We'll know more on that once we get more information here tomorrow. All right, guys? So that's the game plan right now on the oil. Pretty simple game plan, right? Pretty straightforward. I'm looking for a nice deep pullback. I'd love to use the top of that trading range. Remember, don't chase it if it V-bottoms off of that low. All right, big ranges on the Emini and the Nasdaq. More big news coming for tomorrow. It could be another wild one tomorrow morning, but that's all right. As long as the game plan put together, we always seem to find some really good trades in our morning trade room. Now, speaking of our morning trade room, don't forget, we get together and we trade this stuff together every morning at 8 o'clock Eastern time. I'll put all the membership information you guys need. I'll put the free trading course links, and I'll also put those higher time frames, those additional time frame screenshots linked up in the description. If you guys have any questions or if you need any help along the way, any trouble getting into any of the video classes, definitely don't be afraid to call the office. I'll be here to help out every step of the process. We can always chat too, right? We got live chat on the website. If you need help, just simply reach out and we can help out with what you need for. All right, guys, thank you so much for being today. A really good day today in the trade room, right? It was a wild session all over the place. It definitely lived up to the expectations for CPI. We'll see how crazy the PPI report tomorrow morning is, but now we get a game plan. Tomorrow night, we'll come back, do it again. Hopefully, I'll see you tomorrow morning with the members in the morning trade room. If not, we'll see you guys tomorrow night. Be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.